Sunday, the 13th of October 2019. Given that it is October, it's the ASX reporting season for mining companies and gold miners. We saw a couple of quarterly results come out this week and preliminary production numbers where they don't include the cost performance, but just the production number itself. One that did come out was from Resolute Gold. I've been warning about Resolute for a few months now. You can go back and have a look at what I'd said in the previous couple of videos about it. I thought that the stock had really run too hard, and in the face of what seemed like quite large issues at some of their mines, and that I think that's been sort of vindicated a little bit more this week. In general, I just noticed a pattern of not meeting targets and changing the goalposts on their production guidance, and still being too optimistic. And in the past, though, and that's happened to me, I've sort of been burned by a few companies doing that before. So I try to stick away from companies that really try and have that internal optimism that they never meet their forecasts. And Resolute also, they had a huge cash burn at their Syama development project, and they're trying the underground automated underground production methods, which still not fully proven as far as I can tell. So they had their quarterly number come out here, their production update. And it starts out very positive. You can see that it looks like a big number, especially relative to some of their past production results. It sounds like a good number. But then when you look at it into detail, you realize that a lot of that 103,000 ounces came from their Mako acquisition in Senegal, which seems like it was a relatively good acquisition, but I think they might have been using it to kind of paper over some of the cracks in their existing operations. But if you look at Syama, it was particularly the Syama sulfide, which is the development part of the operation, and the underground. It's only produced less than 13,000 ounces last quarter, which is a very poor number. And the last two quarters, in fact, have been quite poor there, when they were supposed to be ramping up to say 25, 30,000 ounces by now. And I think if you looked at some of their forecasts from sort of 12, 24 months ago, you would expect that thing to be ramped fully up by now. So it's not, if you come into this at a individual point in time, it seems like they're all very optimistic and they're all pushing ahead. But when you look back and you follow the company for a few years, you realize that they're always almost there, and that's a concern for me. And that number in particular is very weak. And then there's this sort of, they try and always blame it on something. And I thought this bit here, it seemed like there was a weak number due to a decision to undertake previously unplanned maintenance. Now, but then when you read in, it was 40 days of unplanned maintenance, I think, and even then, that number should have been a lot higher. Because on a daily output basis, it was still below the last couple of quarters. So there's a lot of issues here, and then there's some stuff about recovery in here. It just makes me concerned that they haven't really. They're working on things, and even some of the text about the automated part of the mine, it doesn't sound like it's something that's ramping up. It sounds like something that's being still tested, and that's a concern. Like it talks about, it's almost in a it's doing a few runs, not producing the full tonnages from the underground. So I don't fully you won't know the full details of that until the quarterly perhaps, and maybe not even then. But then another thing is they're still on track for full year 19 guidance in their case, the financial year, sorry, and that's till the end of December. To hit this 400,000 ounce number, I think they need to produce 120,000 ounces, which to me seems to be again optimistic, given I think they're about they produced 103 this quarter. And Mako seemed to be running at full tilt and was running above nameplate, and nameplate and recovery was very good as well. So I don't seem that think they're going to increase their performance there. So most of the performance is going to have to come from Syama. Ravenswood again not really contributing much. Syama oxide is trailing off gradually. I think it was more than 40,000 ounces last quarter. Now it's down to 33, and that's I think it'll keep coming down. They might reach a sort of a stable level around that 25 to 30,000 ounces in the next couple of quarters. But so Syama sulfide's really going to have to hit 30,000 ounces plus. And this announcement came out on the 7th of October, so last Monday. Then we saw on Thursday and Friday this announcement come out that they've had an issue with the roaster and a crack in it, and this this sounds like it could be a major issue. This isn't the sort of piece of equipment that you can just fix up on with on a weekend kind of thing. These are they're going to have to do a lot of work here. I'd say, and this could be, they say it will have a material impact on production from the Soma sulfide circuit. So this is probably in the order of weeks to fix this at best. And these are relatively complex pieces of kit, so I'd imagine it's not going to be fixed anytime soon. So that's another issue, and I think it highlights how old this plant is. I'm not sure how old the roaster itself is, but I know their sulfide plant was built in the 1990s, and you tend to see more of these issues. And then you have to do more maintenance work. Got to spend a lot of money to keep maintaining the plant, and that's just. And then you get these kind of catastrophic failures where pieces of equipment are out of action completely. So it's just a reminder that part of investing in the gold mining sector is really working out which companies to avoid, and that comes from just if you follow companies for a long time and you get continually disappointed, it's no use holding them, because once they start disappointing, there's generally a pattern they'll keep doing that. And one of the reasons I called this channel Between the Lines is it was about reading announcements and seeing this pattern of poor performance, and the way they disclose information. And if it just sits uneasily with you, you don't need to be in it. So that's why I haven't been in Resolute for the last 9 months, because there's something that's just not sitting well with me. Even when you look at everything's very glossy, a lot of the presentations and everything like that, and the forecasts and the CEO is extremely bullish, and it just. But then when you look at the numbers, they're not there. So anyway, that's a fairly consistent pattern from them, and it's still at a void for me. Has come back a lot from the highs. They're down sort of 40% in the last couple of months. But again, I wouldn't be touching it here, because there's not only is this roaster issue now, but the actual performance of the underground is still very clearly yet to be proven. So I've sort of stuck away from that. Next stock, Perseus, I think is the one that I'd sort of recommended in place of Resolute, and it's come back reasonably well, and it's holding in this top, reasonably at the top of the flag here. Probably about fair value here. I bought some again when it dipped below sort of 68 a few days ago. Thought that might be a relatively good buying opportunity. But I thought that was probably a lower risk play than Resolute, for example. They got building their third mine in Ivory Coast, and we should be producing by the end of next year. Relatively consistent production results. So I continue to hold Perseus as sort of a core US dollar gold exposure. And I think it's relatively low risk now, and they're probably in the best place they've been for the last 3 or 4 years. I think they've paid back a lot of their debt. They're taking on more debt now, but it's to build a new mine, which should be quite profitable, and take them to that 450, 500,000 ounce a year production sort of level at relatively competitive costs. So they're in a good position. So that's why I'm happy to hold it here. Silver Lake came out with their quarterly as well, their preliminary numbers. I don't think theirs was actually a full quarterly. And I've got it here, if I can find it. Must be that one. So that was a pretty good result, and obviously that had a very good reaction in the share price. I had considered buying it. It had got to my sort of this long-term trend that I'd been looking at. The thing is that the stock's relatively fully valued here. So even though I thought there was a good chance the quarterly would be positive, their last number was quite high as well. Very good cash build, $24 million of cash build, which is what you'd expect with, when you're selling gold for $2,000 an ounce. You'd hope they're building that level of cash. So stock obviously was up very high, very well the other day, about 12%. At an 850 million market cap ish, don't really think it's that well valued. There's a lot of value in the stock, but they seem to be consistently producing cash now and not having they're at that relatively higher level of cost. But I think one thing I noticed with the all-in sustaining cost figures for Silver Lake is it seems to be a relatively true reflection of their actual cash burn. You can look at their all-in sustaining cost margin, and you'll see that they're actually producing a good level of cash. Whereas some other companies, you'll say, oh, their margin should be $700, but they didn't make any money. They didn't build any cash. And then you sort of wonder why that is. And even after development, even after their development costs, they're still not making any money in terms of building their cash balance. So that's a concern. But Silver Lake producing good cash here. They might be up to 180 million by the end of the quarter. So they're well positioned for growth and to look at some other opportunities. And I think they are in that sort of growth phase at the moment, and they'd be willing to buy another operation. But at the moment, I think the stock's pretty fully valued. So even though I thought that quarterly would be good, I didn't know how much upside there would be here. But the other one, Ramelius, came out with their sort of preliminary number as well, which wasn't that positive. I thought it was, again, it's on a so it was within the guidance figure, which I think they very consistently hit their guidance figures. Whether that means they're not being aggressive enough with their guidance, I don't know, but they almost always make their numbers. But the other thing was their cash burn here was quite high. They've gone backwards sort of 15 million in a quarter where you're selling gold at $2,000 an ounce. But just highlights again how much work they've got to spend on development to keep sort of chasing their tail here to keep producing at these levels. So I think that maybe their capex and development costs was going to be sort of weighted to this half of the financial year. So maybe you start to see a bit more cash build. They did get their permit, I think, for their end of May. I think it's called Greenfinch. Yeah, Greenfinch. So they got the permit for that, which should give them access to some more ounces at end of May as well. But in general, I think that stock's fully valued. I think you're sort of pushing a similar sort of market cap, even a bit higher, probably toward $900 million. So I'm not overly keen to jump into those stocks where they are. Even though they seem to be, like Silver Lake in particular, I think is producing relatively good numbers. Dacian had quite a good number as well come out in their preliminary result. That's obviously, I talked about that in the last video. They were going to be added to the GDXJ, and I think that was probably about here, and the stock took off that week and into that GDXJ announcement. People were sort of a bit slow on that one. I took an opportunity to take some off the table at that $1.60 sort of level. But again, if you look at their numbers, very good cash build, paid back a lot of debt. Sort of had a net cash improvement of $19 million last quarter. So that's a very good result. This is a company on a market cap at the moment, or on say an enterprise value of about $350 million, and they've reduced that net cash, or that net debt figure, sorry. And when you compare it to something like Ramelius, they seem well undervalued. They're producing about the same number of ounces. They've obviously had their issues, but they're still producing cash. They're not going to have to do a capital raising. The market had sort of, I think, convinced itself of that, but there's no need for a capital raising to keep up with their debt repayments. Their company's still in good stead. So, even though they've missed at what their original guidance figures were, and they've had to sort of push that down now, and when I say guidance, I mean sort of feasibility study guidance. But I think they're now producing quite well, and they're a high cost producer, but they're still producing good cash flow. So compared to Silver Lake or Ramelius, you'd probably say that this stock is undervalued now, and something like $2 is quite achievable, I think. But they're still in the doghouse a little bit, so maybe it takes a few more months, maybe 6 months, for people to forget these issues they've had and focus on their actual cash build here. But it's good signs. I think the stock will continue to be well supported, probably around here, and it might be a good buying opportunity. You can see there that it's been, after this sort of rise, it's been able to hold quite strongly. So I think they're in a pretty good position. So they're the ones that have had their results come out, or early results. So I'll blitz through a couple more. Medusa, stock that I still own, doing very little volume. Not a lot to say about it. I still hold it. I think they'll continue to produce reasonably good production figures. Their quarterly probably won't come out for the next couple of weeks. Usually they're the last week. But I would have thought that they would produce some really good cash as well this quarter, because they're an unhedged producer. So they should be selling all their gold at that $1,500 gold price. So they could easily be, make sort of $10 million US in a quarter, which would be a very positive result. Someone asked me about Red 5, and that's a stock that I don't follow that closely. It's obviously been a really good performer the last year. They've seemed to be on that in a similar vein to Dacian, about 30,000 ounces a quarter. Got an expansion project, which is, they've been buying these. I think they bought their assets from Saracen, high cost assets. Again, I think it's a market cap about 400 million, so it's not cheap. But it does have that expansion project, which is quite a large project, but also it's an old mine that they've sort of beefed up the drilling, and from what Saracen and I think that might have been Goldfields who owned that previously, or might have been St. Barbara, but they've beefed it up a lot. So there's not a lot more I can say here. Chart wise, it's holding relatively well. Probably a very good play on a much higher Australian dollar gold price, with that project probably only being economic at these $2,000 plus gold prices. But it's a large project, and that could see them kind of transform. But I don't think the feasibility study was going to be out for another 9 months. So that project's probably 2 years away from production. So that's all I can really say there without sort of following it on a day-to-day basis. Gold Road came out with their the plant was now at full production, or near full production, commercial production levels anyway. That announcement was sold into quite heavily. I think it's an indication the stock had run ahead of itself, and that was already being priced in. So I think that removes some of the risk, and I think they said they were probably going to be on the upper end of the guidance range they'd previously forecast. A lot of that's coming from Goldfields. Goldfields are operating the asset. So it was a good number. So now it's kind of what next. The stock's fully valued. I'm not sure where the growth's going to come from a share price perspective. The market cap of this stock is, I think, about $1 billion here. So they're going to have to really produce good cash flow. Otherwise, there'll be issues. But with that number coming at the higher end of guidance, they should be now starting to produce cash and looking at reducing their small debt they've built up in building the asset. I don't own Gold Road, and I wouldn't buy it at these levels. A couple of the ones that I talked about that I bought in the previous video. Regis, the chart's not that great, but I did buy it near this sort of lower trend line. I bought it at 453, I think. So I was relatively happy with that entry. Sort of a different type of entry. I'm not trying to trade this unless it gets ridiculously overvalued again. But this is sort of a longer term buy. It's kind of a good dividend paying stock. I'm happy to buy it at the lows here and just hold it for a while. I think they'll continue to produce good numbers. So they're sort of still best in class producer for mine. I think they're still a pretty solid company. So I'm happy to hold it if I get a good entry price, but I'm not going to buy it at those upper trend lines. Similar for Saracen, I bought that at 321. I said in the last video, and that was a good entry price. I probably wouldn't buy it at 372, but I'm still holding it as it's a good play on the Australian dollar gold price. And Saracen seems to have that institutional support, and it is a good sort of still still a bit more of a growth stock than say Regis or Evolution or the Northern Star. I think there's a bit more organic growth in Saracen just yet. Good drilling results and a bit of a small expansion they're doing as well. So I can still see this moving to $4 plus, but after that I'd have to look at the environment. But at $4, I think it's pretty fully valued. But it's a good one to hold for mine. Well, seems like a well-run company. So that's most of the Australian producers. Last couple of stocks, some of the developers, Cardinal, come down pretty strongly the last couple of weeks. They had their options conversion where most of the options were converted. I think almost all of them. So now they're waiting for the feasibility study, which has got to be any day now. They've said it's coming in October. So stocks come off the last week in particular. A lot of selling pressure there. I don't know if that's indicative of something with this feasibility study for mine. I don't think it's going to hold any major surprises. The stock seems still undervalued for mine on the level of reserves they have in particular. So that's all about financing the project. Traditionally that's a hard period for one of these sort of companies when they can to get financing. But given the gold price environment, you'd have to think they've got a valuable asset in a time when there's not a lot of other big development projects, and there should be companies willing to buy them out. I don't think they can gold alone where they are at the moment because they just don't have the balance sheet strength for that, and then have to do a massive dilution of the company to finance it. And I just generally not. I've only seen that happen a few times. It's most companies are not willing to do a 100% equity raising, double the number of shares, and then do another $200 or $300 million of debt. I just don't see that happening. So it's all waiting on that project, on that feasibility study, whether everything comes in line with expectations. But as much as I can look through all the PFS numbers, I don't see any warning signs that we're going to see a huge difference here. And potentially there could be some quite positive announcements as well in that feasibility study in terms of recoveries, which should help the operating costs. So just wait and see there. Can't be too long now. West African Resources has pulled back quite a lot the last couple of weeks as well. I'm not sure what's driving that. Probably just I think it had such a strong run. It had kind of doubled in the 3 or 4 months since June, so it was probably due for a pullback here. Had a reasonable recovery on Friday. Probably sitting at this. It seems to be sitting at that previous high at that 44 sort of cent range. So maybe it's testing the breakout, you could call it. There has been some terrorist incidents in Burkina Faso. There was an attack on a gold mine a few weeks ago. I think it was last week actually. Seemed like that's quite negative news when you're a gold miner in Burkina Faso. It wasn't an international company from what I can gather from sort of the news reports. And then on Sunday, I think I just saw on the news today there was an incident at a mosque as well. All these incidents tend to occur in the northern part of Burkina Faso, probably 500 kilometers from where WAF is. So I don't think there's any issues that they're under threat, or there's imminent threat of jihadists coming and utes and storming their mine or anything, or their project. But it does create a sort of an uncertainty about for people to invest in projects in countries where they have this sort of instability. So that's a bit of a negative on the stock, but I think that the project strength will continue to speak for itself as it gets closer to production. Should see some deep drilling results probably toward the end of the year. Probably in the next 2 to 3 months when they start the underground drill positions, and that could extend the reserves at the M1 South project by another couple of 100,000 ounces, which will push out the mine plan and reduce costs in the latter years as well. So that should be pretty positive news, and I think the project seems they don't seem to be missing a beat in terms of construction. It seems to be almost ahead of schedule, if anything. So from a production point of view, that first year is 300,000 ounces production forecast at very low cost, sort of sub $500 an ounce US. So they're going to be churning out cash that year. So when the market starts to pick up on that, I think you'll see a similar sort of price action to what we've seen in Gold Road, for example. But obviously in Africa, there's a few more issues like I just talked about. So that might act as a bit of a drag here. But in general, I'm not sure if that's what's behind this. I think this is more just related to general selling pressure from people taking a bit off the table from having a stock that's doubled in the space of 3 months. But I think it'll continue to rally as we get closer to production. So that's all the stocks I'm following at the moment, and a little bit of analysis. I'll probably have a look at where the rest of the quarterlies land, and maybe do another video in a few weeks. Thanks.